Okay, so good morning, good afternoon, good evening, everyone. I am Manoj Dave, currently serving as a head HR and finance at Startup Steroid. With over 24 years of experience in finance, I specialize in both US and Indian accounting, HR, payroll, day-to-day financial management, MIS reporting. Throughout my career, I have undertaken roles encompassing financials, tax planning, and comprehensive financial analysis. I pride myself on generating innovative solutions driven by a proactive attitude and a strong analytical skills. My proficiency with accounting softwares like QuickBooks, Zoho, Tally, along with tools like Microsoft Excel and Office suites enables me to streamline financial operations effectively. Today, I'm excited to discuss how outsourcing accounting function can be strategic advantage for startups, allowing them to focus on their core competencies while ensuring robust financial management. Imagine this scenario, you are a startup founder juggling multiple priorities, developing your products, building your customer base, pitching to investors, and managing your team. Amid all this, accounting often takes a backseat. But here is the thing, poor accounting practices can lead to costly mistakes, compliance issues, and lost opportunities for growth. That's where outsourcing steps into save the day. So we are going to cover up the outsourcing accounting function topic as a discussion for the day. We'll start with a very important point, which highlight out the challenges startup faces with in-house accounting. So let's start by addressing the common pain points startup encounters when handling accounting in-house. The very first point is limited resources. Many startups, with small teams and tight budgets, hiring a full-time accountant or a team, means diversifying or diverting your precious resources from other critical areas. So like product development, marketing. So outsourcing can elevate this financial and operational strain. So you will be able to divert out your resources in the right directions, which will help you to achieve your goals. Second point is with respect to lack of expertise. Whenever we are hiring an in-house accountant, the accounting isn't just about balancing the books of account. It involves navigating complex tax regulations, uh, compliance requirement, and financial planning. Most startups simply don't have an in-house expertise to handle all this, interests effectively. So it's more like when I'm hiring an accountant, he will be more trained and having a skill set with respect to the accounting functions. But then at times he won't have the tax regulations related knowledge. So that's he's going to lack some skills, which is not going to help us out in managing all the accounting functions, tax functions, payroll functions. So that is one of the challenges that the startup is facing for the in-house accounting. The third point is with respect to time constraints. Founders and their teams are often wearing multiple hats, so spending hours on payroll, reconciling bank statements, preparing tax documents, distract from focusing on the strategic growth. So it's again, it's more like the startup founders are, focusing on all these activities which are non-productive in nature. Fourth point is with respect to risk of errors. Now, accounting errors are not just inconvenient. They can be where they can be disastrous. Mistakes in financial reporting, tax filing, cash flow projections can result in fines, legal issues, and reputational damages. So this is again a risk of error. So when we are hiring team in-house, these are some of the pointers which will, these are a few of the challenges that startup will be facing. Now, the transformational benefits. Now, once we have highlighted the in-house accounting challenges, now the next point is with respect to the transformative benefits of the outsourcing of accounting. Now, outsourcing isn't just about conveniences; it's a strategic decisions, and here is why. So, if I just need to list down what are the benefits of outsourcing, the very first point is cost efficiency. By outsourcing, you know, you can avoid the overhead cost of a full-time employee. You pay only for those services that you need, whether it's a bookkeeping, payroll, or financial analysis. Uh, Many services providers also often a scalable pricing models that grows with your business. So, it's again, when the volume goes up, your cost goes up, volumes are down, your cost is also less. So you can plan out your cost accordingly. The second point is with respect to the access to the expertise. Now, outsourcing firms are staffed with professionals who specialize in accounting, tax compliance, financial strategies. So they stay up to date with with ever changing regulations, ensuring your business remains compliant and optimized. So this is again a plus point for outsourcing the accounting services to a third party vendor that will help you to access to have the multiple expertise. Time saving, that's the third point. Freeing up time spent on takes accounting tasks means you can redirect your focus to activities that drive growth, like acquiring customers or refining your products. The fourth point is scalability. Now, as your business grow, so do your financial needs. As outsourcing partners can scale their services to match your evolving requirement, whether you need help with financial forecasting or investor reporting. So that way, scalability also will help. The fourth point is with respect to reduce risk. Now, professional accountants minimize the risk of errors and ensure your financial practices are compliant with local and international laws. Many firm also offers liability protections. So, that is also an additional, I would say, the risk cover that you get in outsourcing of accounting. The last point is with respect to technology. So, advanced technology access. Now, outsource partners often use state of art accounting softwares to provide real time financial insights, automation, and analytics. Now, this not only streamlines the operations but also enhances decision making. And when we have discussed the disadvantages of in-house team, and now we have highlighted the advantages for the outsourcing team. Now, if the next question comes is what to look for in an outsource accounting partner. So whenever we are identifying out the third party vendor to help us in outsourcing of accounting services, what are the points that we need to cover up? So choosing the right partner is crucial. And here are some points that you can consider when you are shortlisting out the third party vendor for your accounting outsourcing services. The very first point is the industry expertise. Work with firms that have experience with startups or your specific industry. They will understand your unique challenges and opportunities. So, try to identify out a third party vendor or an accounting outsourcing partner who has already worked in the area of operation or in the industries that you are working in. So that will be that is one point that you can use while identifying out the outsourcing partner. Second point is comprehensive services. Ensure the provider can handle everything you need, from bookkeeping to tax compliance to financial strategies. So you need to list down the scope of activities that you are looking out for, and then accordingly validate whether the third party vendor or the accounting outsourcing partner has got those abilities or the skill sets, or they provide all these services. The third point is with respect to scalability. Look for a partner who can grow with your business, offering more sophisticated services as your needs expand. So, try to identify out a partner who has got the opportunities to, scale along with your, growth. Technology integrations. Ask about the tools they use and how they integrate with your existing systems. A seamless tech stack ensures a smooth operation. So, try to identify out, uh, technology integration. So, what are the technologies that they are working on, and how they are going to help you out in streamlining your day-to-day operations in their technologies. The other point is with respect to transparency and communications. Now, clear reporting and regular updates are not negotiable. Your partner should function as an extension for your team. So that is a very important point that you need to consider when you are shortlisting a third party vendor or an outsourcing partner. And then the last point is with respect to the proven track record. So, request for case studies, references, or client testimonials to validate their expertise and reliability. So that way you can shortlist out the right partner to help you out in your outsourcing journey. Now, let me share some of the examples that we came across when we are managing, the third-party account outsourcing activities for our client. One of our startup company, a SaaS company, was struggling with cash flow management and tax compliances. By outsourcing, they not only avoided the penalties, but also identified of tax saving opportunities, freeing up significant capital for growth. Now, from the penalty standpoint, many times it happens that, you are receiving an IRS penalty, notices from IRS stating that, the tax returns are not filed on time, or, there are some errors in filing your tax return. So, we can provide them a proper explanations, and we can also help client to get the waiver of the penalties from IRS. So that is, one of the point that we have come across. In one more case, one of our startup was an e-commerce business. Its bookkeeping and financial reporting was outsourced, and this allows the founder to focus on marketing and operations. So, the more like, founder was focusing on more productive activities for marketing and operations, and that leads to 50% increase in the sales within 6 months. So that way, we help them out in focusing on the core activities and all those known core activities, but critical non-core activities we manage. So, from that standpoint, they were able to increase their productivities and sales. Now, I will be covering up some of the practical tips to get started with outsourcing. And this will be a very important point whereby, everyone needs to know about what are the tips that help to, decide out with respect to the outsourcing. Now, access your needs. That's the very first point. So, start by identifying out which accounting task need help. So, is it like bookkeeping, tax filing, financial analysis, payroll? What is the function or which are the area of operations that you are looking out for to outsource, or where you are finding it difficult or challenging or time consuming, so that you need to list down. So that way, first identify out what are your needs. Second point is with respect to budget. So, when we are doing outsourcing of activity, the second point is with respect to understand the cost of outsourcing and how it fits into your overall budget. So remember, uh, this is an investment in efficiency and growth. It is, many a times it's, the startup founder says, there is a cost, accounting is a cost, outsourcing is a cost. But, please remember, this is an investment which is going to help you out in improving your efficiency, and it's going to help you out to grow. Now, third point is start small. If you many a times it happens that you are hesitant, you feel like how my business operations are going to be managed by the third party vendor. So I would suggest start with a small stuff. So begin with one or two tasks, like let's say for example bookkeeping or payroll outsourcing or tax preparation outsourcing, and gradually slowly and silently expand the scope as you see the benefits. So start with small one or two activities, uh, review, assess your benefits, and then you can outsource more. So that's start with small is the third point. Fourth point is research thoroughly. Now, take your time to vet potential partners, to compare proposals, ask questions, and ensure their services align with your needs. If you already have cover up when we are, shortlisting out the third party vendor or outsourcing partner, so take time, list down different available potential partners list, compare the proposals, ask questions, and ensure their services align with your needs. That's a very important point that you need to cover up when we are doing an outsourcing of activities. And then set communications expectation. The last point is now when we are establishing a clear communication plan with our partner, regular updates and reports will ensure you stay aligned and informed. So now let's say, for example, if I'm outsourcing my bookkeeping and accounting services, so I need to just have to have a clear communication plan with a partner with respect to regular updates. Let's say, for example, if I'm going to get a weekly updates with respect to my financials, monthly bank reconciliation statements, I would suggest daily, weekly, bi-weekly AR, AP reports. So that is going to give me some insights about where we are with respect to our accounting activities and what is the status of the current accounting bookkeeping and accounting status. So set clear expectations with the partners. Now, after discussing all these points, the concluding remark is that outsourcing your accounting function is more than just a practical decision. It's a strategic move that allows startup to focus on what they do best by leveraging the expertise, scalability, and advanced technology of outsourcing partners. You can mitigate risk, improve efficiency, and position your business with sustainable growth. So this is some of the concluding remark that we do have. And now we are open for any questions that we do have that I can answer. So I will just check. Okay, I have one question from Savi. The question is, how can outsourcing accounting help startup manage their cash flow more effectively? Now, when from the cash flow standpoint, any business, okay, if we get a proper cash flow statement report on a regular intervals, the startup founder will have a clear understanding with respect to what are the cash inflows and cash outflows and what is the cash balance that we do have. So, and this is a very important report that every startup or every company or every business will require because to run the show, run the business, we require cash, and the cash flow statement report is going to provide us the clear status update with respect to cash positions of the company. Okay, we do have one more question. What are the hidden costs, if any, should startup be aware when outsourcing accounting services? Now, this is also a very important, question. I would say, when we are shortlisting our account outsourcing activity. So, from the cost standpoint, uh, there is a setup and transition cost. So, whenever we are outsourcing activity, there will be a initial cost of setup and transition. So, uh, fees associated with transition your accounting to an external firm, especially if there are complications with the data migration, training, or adjusting or to a new software. This could also include onboarding fees. So that's one point that we need to highlight out with respect to the hidden cost. Second is ongoing fees. So outsourcing accounting services may offer a basic rate, but often additional costs arises for a task like handling of tax filing, separate from regular bookkeeping, providing financial consulting or business advices, customizing report or handling more complex accounting matters, providing audit support or dealing with legal or regulatory compliances. So these are some of the additional costs that will come uh, over and above the normal fees. Third point is with respect to the software and technology fees. Now, if the outsourced accounting firm uses a particular accounting software or tool, you may have to pay additional subscription fees for access, training, or upgrades. Many times, like softwares like QuickBook comes up with multiple accesses for different users. So, but they charge additional fees for that. So, if you require an access to those accounting software, your user access fees also will be an additional or hidden cost that will come. Fourth point is with respect to quality control and miscommunication costs. We already covered that. If communication is not clear or is not defined, and if there are errors due to miscommunication or a lack of understanding about your business, it can cost time and money to fix. And there might also be a cost for getting clarifications or report or an extra work, for correcting the mistakes. Uh, Scalability cost. As your startup grows, your accounting needs may also change. And if your accounting or outsourcing firm isn't equipped with scale with you, there could be a cost associated with switching providers or upgrading your package. Over dependence on external expertise, there might be an additional cost. If your team becomes too dependent on outsourced services and loses the ability to manage basic functional tasks internally, which may limit the flexibility and responsiveness of your business. So, these are some of the hidden costs uh, that will be there with respect to account outsourcing activities. Hope I was able to answer your question. We have one more question here. What roles does technology plays in outsourcing accounting, and how secure is the data shared with this services providers? So a very important question and very critical question in today's world. When we are calling it out, technology is central to outsourcing of accounting and provides both opportunity and challenges for startups. I will just now cover up how it plays a role along with considerations about the data security. Now, role of technology in outsourcing accounting, automation and efficiency. That is a very prime most important and critical point. So automation and efficiency. So tools like cloud-based accounting softwares like QuickBooks, Xero automate repetitive tasks such as invoicing, expense tracking, and payroll. So that way, we are going to improve our productivity. Automation minimizes error, speed up processes, and reduce manual work. Real-time data access. So cloud-based platform allows startups and their service providers to access financial data in real time from anywhere. So you can access out data from anywhere in the world. It's a cloud-based platform. You just have to log in. It's web-based environment, and you can have an access to all your data. So it's a real-time access. Advanced analytics and reporting. That's also our point by with respect to technology. So accounting firm often uses technology-driven analytics tools to generate customized financial reports and forecast, giving startups better insights for strategic planning. And nowadays, I think so. It's an AI world, so AI-driven tools can identify our trends, flag anomalies, and provide recommendations for cash flow management and other or cost control. So it's more like AI can take control of all your reporting, can also analyze the reports and provide you the real time advice with respect to the data. Uh, Data security. Now, I'll just cover up the point with respect to data security. Data security is a critical concern when outsourcing accounting, as your financial information is highly sensitive. Uh, I will just list down how it typically being can be handled. So, encryption. That's the very first point. So, most of the reputable accounting softwares and service providers use advanced encryption protocols. So that way, It protects data during the transmission and storage. Secure cloud storage. Financial data is stored on secured cloud servers and multiple layers of protections, including firewalls, intrusion detection systems, and data backup. Access controls. Service providers implement role-based access control to ensure only the authorized personnel can view or edit your financial data. Two-factor authentications is also often required for a system access. Compliance with standards. Many providers adhere to industry regulations like GDPR, SOC 2, ISO to 27001, ensuring your data is handled in compliance with strict security controls. Now I'll just list down potential risk and how we can mitigate them. Data breach, with while rare with reputable providers, breach can occur. Uh, to mitigate this, choose provider with strong reputations and transparent security policies. Human errors, employees' mistakes, such as weak passwords or phishing attacks, can expose data. Train your team to recognize security traits and use a strong credentials. So provide your team with IT security trainings with respect to how they can protect themselves from the phishing attacks. Lack of ownership of the data, clarity in the contract that your company retains full ownership of the financial data, because your terms and conditions in the contract should list down that all the control of the data is with the company, not with a third party vendor. Now, key takeaways for startups with respect to this question is technology in outsourcing accounting offers significant advantage in efficiency, scalability, and insights. Always vet service providers thoroughly, focus on their security measures and track records. Ensure your service agreement outlines clear provisions of data privacy, ownership, and breach management, and regularly review the access permissions and monitor financial systems to maintain and securities. I think so. I was able to answer all the questions. Do we have any other questions? No, I don't think so. We do have any other questions. If anyone has got any other questions, do let us know. Okay. Okay. So now we are end of our session for today. Thank you all for joining me today. If you have any questions or would like to discuss how outsourcing can specifically benefit your startup, I will be delighted to check further. So let's build something great together. Thank you. Thank you very much. Have a good day ahead.